What's going on, guys? Welcome back to another video. In this video, I've got another extremely important AMC update to bring all of you this afternoon. So what we're going to be covering in today's video is the strong probability that the massive AMC Short Squeeze does kick off throughout this next week. Now, if you guys have watched any of my previous AMC videos, you guys know that I do not like to give any specific dates for when the AMC Short Squeeze is going to start or end. And I think that it is in everybody's best interest for basically their psychological state to just prepare to hold this stock for an extended period of time. And if the squeeze happens sooner than everybody expects, then that is just icing on the cake. But again, nothing I say in these videos is financial advice. These are for educational and entertainment purposes only. Now, when we take the AMC short squeeze situation week by week, coming into this next week that we have coming up, all of the stars are kind of aligning. We have a lot of evidence to go over in this video that I have not seen a lot of people talk about. So what we are going to be going over is this new Ortex short squeeze signal that I know a lot of people have covered, but we're also going to go over the failure to deliver numbers and how these are going to play into the actual options expiration date that we have coming up this week. So essentially the purpose of this video is to just prepare for the craziness coming up this week. If the squeeze ends up actually kicking off this week, that's amazing. But if it doesn't, we still are in the best position possible, and we still are gathering evidence every single day that is suggesting to us that the squeeze is going to be coming in the near future. So before we get into all of this amazing evidence and information, if you guys would like to help out and support the channel and earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. So as we can see, last week we had an unbelievable week for AMC. We ended up closing the week at $12.98 when the market closed, and in the after hours trading period, we fell down to $12.80. But we were recently made aware of this short squeeze trading signal that Ortex has sent out. So a short squeeze signal was generated based on the recent price increase and the high shorting level in AMC. The mean return for this signal is 44.53%. Now let's take a look at some of Ortex's signals so we can see types of trading signals. Ortex has 5 families of trading signals: short squeeze, EPS, RSI, MACD, and company events. The different types of signals look at different aspects of the metric that is the main base for that signal. For example, the short squeeze signal comes in type 1, 2, and 3. They look at slightly different aspects of how to detect a short squeeze, considering everything from short interest, utilization, cost to borrow, and the stock price, as well as the rate of change in all of these different variables. You might see all 3 of them triggering at the same time, as we did on GameStop just before the epic price moves at the end of January. So this is not something that we have not seen before. We saw Ortex put out a short squeeze signal for GameStop right before they actually had their massive run up. Now, typically when we see these kind of alerts come out from any one of these data services, we typically do not see an actual date or a time frame for when these signals are actually supposed to play out and make all of us money. But that is not the case with Ortex. They actually do give out a recommended holding period. So when we come over to this screenshot right here, we can see that the short squeeze type 3 trigger right here, this type 3 yesterday, available in 9 days, the signal return. The recommended holding days that they have, 6 days. So this is part of the evidence that I was talking about earlier, that Ortex is suggesting that this short squeeze could kick off this week. Now, everybody has been calling out in the past that Ortex has been the most reliable data reporting source for all of this different data that we have for AMC, such as the cost to borrow, utilization, and the short interest as a percentage of the free flow. But again, they only account for about 85% of all of the different data out on the market. So I typically only look at the trends in the data that all of these reporting sources have, but it is very interesting to see that Ortex has come out, given this type 3 short squeeze notification, which is the highest level, and the recommended holding days, 6 days. This means that they are thinking that this situation could play out over this next week. So now let's get into this failure to deliver data and what this means for us going into next week. So this is the point in the video where it's going to get really good in terms of how this could affect the AMC share price. So first, we need to make sure everybody understands exactly what a failure to deliver is. So a failure to deliver refers to a situation where one party in a trading contract, whether it's shares, futures, options, or forward contracts, does not deliver on their obligations. Such failures occur when a buyer, the party with a long position, does not have enough money to take delivery and pay for the transaction at settlement. A failure can also occur when the seller, the party with a short position, does not own any or all of the underlying assets required at settlement and so cannot make this delivery. Now, when we come down a little bit further, we can see that failure to deliver is critical when discussing naked short selling. When naked short selling occurs, an individual agrees to sell a stock that neither they nor their associated broker possesses, and the individual has no way to substantiate their access to such shares. The average individual is incapable of doing this type of trade, but an individual working as a proprietary trader for a trading firm such as Citadel, Melvin Capital, or any of these other hedge funds and risking their own capital may have the ability to carry out such an order, though it would be considered illegal for them to do so. Some such individuals or institutions may believe the company they short will go out of business, and thus in a naked short sale, they may be able to make a profit with no accountability. This means that all of the different institutions that are naked shorting AMC at the current time need the stock to go to zero. If the stock does not go to zero, they lose. Now, the fact that bankruptcy for AMC is now completely off the table, they are hiring 10,000 new employees, they are buying up new movie theaters, and over in Europe, we are seeing some pretty large reopening efforts, and they are actually going to start allowing these indoor entertainment venues to start servicing their customers. With all of this information that we have available to us, this is our battle to lose. We own the float, meaning that if we do not decide to sell our shares as a group, we set the price and we can squeeze these hedge funds out of essentially everything. Now, let's take a look at the most recent failure to deliver data, and this is where it gets very interesting. So typically, we see some pretty substantial spikes in the amount of shares that are failed to deliver around these monthly expiration dates for options. Now, if you guys have been watching my previous videos, I've been talking about this monthly expiration date for May a lot and how it could affect the AMC share price in the short term. Now, when we're looking at all of these fails right here, this does not mean that this is the total per day of the amount of shares that were failed to deliver. This is more of a running total. So we can see that the jump right here on April 13th through April 14th was about 2 million shares that were failed to deliver. So let's see what happened to the share price of AMC on the day that this happened. Now, when we come over back to my desktop brokerage, we can see that this is going to be right around here is April 13th, and the stock was trading at about $8.88. Now, after this 2 million share failure to deliver, we saw the stock jump all the way up to about $9.70. Now, this is a trend that I wanted you guys to look at, and we all need to kind of just examine all of this data. When the failure to deliver numbers spike, it seems as if we actually get a spike in the share price as well. Now, since we also have a monthly expiration date for options coming up, and these massive spikes in failure to delivers typically tend to happen around these actual expiration dates, we could see a massive spike in these failure to deliver numbers that end up pushing the share price higher. But we're not actually going to have direct access to this data because all of these failure to deliver numbers come out about 2 weeks after they actually happen, or it's even longer than that. But when we come over to this option chain right here, this is what I have been talking about a lot in my videos. If we see a spike above this $14.50, or even $15 mark for AMC coming up this week, a lot of these contracts right here are most likely hedged, meaning that the institutions have already come out and bought the appropriate amount of shares to cover these contracts. But if we get really close to these $15 levels, all of these new contracts right here now become in play. So there is 3.5 million shares that need to be covered at this $20 strike. If we see this massive spike in AMC that we were able to see last week, and the institutions start to cover this $20 strike by going out and buying shares on the open market, this creates that positive feedback loop that I have been talking about a lot in my videos that continuously pushes the share price of AMC higher, because the institutions are going to be putting a lot of buying pressure on the share price of AMC. So again, I'm not trying to hype everybody up that a squeeze is going to happen this week, but I just wanted to show you guys in this video how this week coming up is a lot different than a lot of the other weeks that we have seen previously. And with all of the information that we have been able to gather over the last couple of days, the probability, when you look at it from a probability perspective, the probability that AMC does start its short squeeze this week is marginally higher than what we have seen in the past going into previous weeks. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great weekend and are excited for the week ahead, and I'll see you guys in the next video.